When you book these types of events, you expect about a third of the attendees to turn up, but clearly everyone really likes this one, and we had 100% sign up for it.
The most important message I want to get across today is this idea that, at least over the last couple of years, we've all been talking about like tokenization, real world assets, institutional crypto. And invariably what this revolves around is something that we all know quite well, at least many of us from a previous world, and that's called fixed income. The goal of crypto in some shape or form is to challenge the rails that are currently in place within the traditional financial system. This is what it is. And not many people understand how this works.
So I want to talk a little bit about off-exchange. It's a way for an asset manager to stake collaterals on a centralized platform without those assets leaving their control. And the exchange sees you've locked assets in that collateral vault, and they give you immediate trading credit of the same amount for you to have access onto the exchange to trade.
So as a self-confessed fixed income nerd, who spent a decade working in various investment banks, this topic is very interesting to me. So we want to touch on two broad topics today. Obviously, as Kevin talked about, it's fixed income and sort of the interesting things around that, but then also what Kevin talked about, which was the convergence piece. And I think between these two broad topics, we're probably going to have a lot to talk about over the next 30 minutes or so.
Liquidity begets liquidity, and that's actually one of the things that we do as firms is we provide liquidity to markets. We've been doing it, at crypto exchanges now since day zero, and that's really what gets it done. The innovation here is arbitrage opportunity and market neutrality. That is what brings liquidity. That's what brings people like us who have a bit of capital are going to put it at risk in a way that's controlled with venues and counterparty risks that we're comfortable with. And that's what brings more liquidity. So, we're certainly like the tip of the spear on that front. Yeah. But then things should snowball pretty quickly from there.
And as John mentions now, liquidity is probably the core concept there, rather than having a proper curve to go 6 months out, 1 year out, 2 years out. But I do believe having that ability of a curve in the majors presents a lot of opportunities with regards to products, with regards to hedging of risk, and I do foresee it. That if we can do it for certain larger altcoins as well, what we then almost create is ecosystem for trading shops to get involved with each other. Because right now that's not happening. Right now we offer our services to the market, to the street, for people who want to trade. We do a bit of prop when we see a bit of arbitrage there, but ultimately what you want to do is create almost what the hedge funds do in traditional finance space, and that requires it. So that's where I think we're going to go.
What does it mean for you guys when someone like Infinity comes along and actually offers this longer yield curve? Like what excites you about the types of things that you can start to offer your customers?
It's much, as John's, much bigger than equities, but it's pretty foundational for the big guys to come in.
And I think following on from that, you'll start to see kind of like your arbitrage types of trades where it might be like your USDC curve versus USDT curve, right? Or again, like curve trades, take for example, like ETH staking. Where is that rate going to go, right? Is it going to go up or down? What does the forward curve look like? And I just want to take a long-term view on the ETH staking yields, and so we will have the closest thing to synthetic ETH fixed rate yields.
It becomes very hedge fund-like.
The market opportunity is demonstrably there. You look to TradFi, and the appetite, especially from the high net wealth community, is almost endless.
I do think that nature of cross-currency swaps and that convergence that we're seeing there, the good thing is we're not supposed to reinvent the wheel. I think you rightly pointed out, right, what you saw during your career and what we see now. What we're trying to do is say, look, a lot of this has been done in TradFi. Crypto, if it's another asset class, removing the tech aside, but just looking at the underlying thing, it's another commodity, so to speak. Yep. Can we apply very similar rules? Can it offer similar benefits with its own nuances? I mean, that's why Amy was talking about earlier on. Well, the custodians are trying to figure this out to make it almost seamless in how we do it, so it feels the same. The one thing we have to realize is you are not going to get a hedge fund or a family office to change the way they invest. So the way you do it is you make the product that you offer them as close to what they're used to as possible. And I think that's something we're trying to get right. This convergence, it needs to happen. And the reason why is it shows that we can be adults about the business that we're trying to do. I think the one risk that we do have to be very wary about, though, is the closer we get towards a convergence, the more, as John rightly mentioned, we have to interact and work with regulators.
But I do think at the end of the day, it's a software eats the world value proposition. Yep. And it's just like a better way to do this stuff. The technology's there, the adoption will come. It's just better. Like eventually,
it's like
better wins.
Just go use it, right?
Yeah,
like to your point on like the two ecosystems, right? Like, yeah, there'll be two ecosystems, but just choose the one that gives you the less slippage, the better price, whatever.
And there's waypoints to get there, and it's a lot of it's the boring, unsexy work of interacting with regulators, building consensus, speaking with one voice, getting together in a room and saying, all right, here's our talking points this month, stuff of that nature. But like eventually you end up there.